matter stands. But in the meantime, IT has been the big headline for the last couple of days with a lot of high expectations from this quarter. Reema, is that right?
Well, I think no muted expectation is a better way to put it. But let me quickly list out what brokerages have to say this morning. So Nomura has turned bullish on the IT sector. They say that Q1 will mark the bottom of sluggish growth. It's not that we're expecting a strong recovery in discretionary demand. That will take a few quarters, but discretionary demand is unlikely to worsen. Also, they're saying that once US starts cutting interest rates, there is a potential thaw in decision-making by US corporates post the election. Demand could pick up. Gen AI adoption is likely to gain steam in the next, 1.5 year. And therefore, they believe large cap growth will accelerate in FY26. So not so much this year, but FY26 growth could be at 7.7%. They turn bullish in the sector. They upgrade Wipro, Infosys, HCL Tech and TCS. Their top picks in the sector are Infi, Wipro and Tech Mahindra in the large cap space where they've got a buy call. And in the mid cap space, they like Coforge and Birlasoft. Nuvama says that even post the recent volatility, the fall that we've seen, then the pickup in the last 1 month, they continue to remain positive. They believe that FY25 estimates have already been cut quite a bit in the last 2 quarters, and from here on, do not expect EPS downgrades. They're also expecting FY26 growth to be much better than FY25. They believe high-tech, BFSI, the laggard sectors will start recovering. Retail will also pick up. Manufacturing has always been strong. Deal flows have always been very strong, and that helps them maintain that bullish view on the stock. They like LTI, Mindtree, Infi, Coforge, Persistent, TCS, HCL Tech, and FirstSource. But not everyone is bullish. So Jefferies says that as of now, at least, the demand commentary suggests that there is pressure on IT budgets and there is a limited pickup in demand. FY25 guidance is unlikely to change, and therefore they believe there is a possibility of EPS downgrades. Valuation is expensive. Jefferies says the sector is trading at 28 times PE, which is at a 20% premium to the 5-year average. It's also at a much higher premium to the Nifty, very rich according to Jefferies, which is why they have a selective call. Infi is their only top pick. But I think it's that yesterday's CLSA turning bullish on Wipro, which has been a laggard. There was a double upgrade by CLSA on Wipro, followed it up with Nomura turning positive on the sector. I think that's, the bullish argument is overtaking some of the bears on the street who still think that maybe the stock run-up has been a bit excessive.
As always, all ears for that management commentary. Any hint, any drop of a word saying, optimism,
pick up.
Returning or discretionary spends are picking up, that's just going to light the street on fire. And I think the stocks have already moved up in anticipation of that. But staying